All right. Good afternoon, ladies and gentlemen. I've got some slides here on the office sector, Strata office sector, and a little bit, one or two slides on the medical suites. The industrial slides, I think there's some technical glitch. I will just verbalize the presentation for the industrial slides, for the industrial market. So moving on without further ado, I only got 20 minutes. I will talk about the office sector first. And this chart gives you a flavor, a visual representation of how the office market has behaved over time. And we realize that today, office rents are still way below what they were prior to the the global financial crisis. Although my topic is on strata office space, and these charts, the first few charts I have here are on grade A office space. They are still relevant because the drivers for the office market, office space market, you need to understand what has been driving and what has been moving things in the commercial space market. And of late, you find that since first quarter of this year, the office market has actually turned around. It has stopped falling. For the whole of last year, you see a red ink. Market has been falling, and a lot of people have come to the conclusion that the office space is oversupplied. Is that right or is that wrong view? This will show you that, okay, this slide first, before we go to the supply slide, the total available stock of office space in the whole of Singapore is about 78 million square feet. It's about the size of the same supply that Kuala Lumpur has. KL has also 78 million square feet of office space. So, is the office market in that bad shape? Not true. For grade A office space, you find that the vacancy rates have now fallen to quite a low level, about 4 to 5% level. As a rule of thumb, whether in Hong Kong or Singapore, we observe that once vacancy rates fall below 8%, the tables turn and it becomes a landlord's market. The landlord can control rents in some way. They are no longer in a position where I need to fill up my building desperately. I need now to raise the rent for my remaining space. So the office market has suddenly turned and we lost track of it. Just with a blink of an eye, everyone was saying it's oversupply. Now it seems to be tightening up. And it is likely to tighten up further for this reason that the average demand for office space throughout the island is about 1.2 million square feet for the past 10 years. These bar charts may show that there's a lot of supply coming up. But having said that, a lot of the supply is outside the CBD. Within the CBD, there's not much supply. And would tenants then move outside the CBD? Not likely. If you want to set up an office in Singapore, you have your mind set on opening an office in CBD because of prestige, you will go to the CBD. So the suburban office market is not going to create sort of a competitive pressure on rents within the CBD. So coming back to the chart, right? So the black line, this dotted line is island-wide demand, 1.2 million square feet. It is not shown here, but demand in the CBD has averaged about 1 million square feet a year. Right? And 1 million square feet, all these black bars shows the supply within the CBD, and the demand is here. You find that it is undersupplied. Then what about this 3.6 million square feet coming up in 2017? But notice it's an inequality. It is more greater than or equal to 2017. It can be 2020, 2019. So the supply here can spill over. And there is a shortage of office space in Singapore, right? And there's nothing anyone can do about it because if you launch a site now, it takes 4 years to complete. So what has been driving the office sector? Well, for one, we find that there's a return of optimism in a survey by Hudson's. We find this that the sentiments were falling, right, until first quarter this year, and now it's rebounding. So, of course, it's not going back to the peak, but at least it is not in the doldrums. So it's picking up. Secondly, we find that you may hear that the Ministry of Manpower is not giving out that easily. Employment passes, PRs being kicked back to EPs or S-Pass, from EPs down to S-Passes. Nevertheless, the number of leases from the residential side is at a record level, expected to be a record this year. This is a very clear indication that there's still a lot of incoming overseas people. I mean, whether you're coming here for work or otherwise. But most of these, because it's lease, is coming here for work. So the headcount-wise, foreigners are still coming in. Then on the other hand, then there's another case for buttressing the office case, is that we find that since the global financial crisis, the three sectors that suffered most, the banks that suffered most, are now picking up again, right? Together with the commodity firms and the oil and gas companies. So moving forward, what we expect of the Grade A office market is the positive slope, a trend line going up for the next couple, or at least the next 3 to 4 years. So I now have described to you the Grade AAA office space. What then of the kind of office tenants do you expect moving forward? Although the banks have recovered, but the banks are still not in a condition to expand. A lot of them have overexpanded. They have excess space that we call shadow space they want to lease out. Demand is coming from smaller companies, the real economy companies. Companies like headhunters, companies like from China, commodity companies, particularly the Chinese companies. A lot of them come here to do transfer pricing. And you have oil and gas trading companies. So that's the smaller tenants are taking up the space for office premises. So that actually benefits strata office space. Right. This chart shows you, the blue line shows you the average prices for strata office space. And you see it's clear-cut trending up. Even though in the AAA market you see things are not as strong as this. The prices are trending up. Transactions year on year has been rising, right? And this year likely to exceed 2012. Price-wise, the performance of strata title office space has outperformed that of the URA all commercial or office price index. Right. And when you look at strata title office space, it's important to realize that you just cannot generically say strata office space is something that is a good segment to be in. You have to look at the size, the bite size of the investment, where the market is, and what people are buying. Here I have a pie chart showing that 50% of transactions were done in a less than 2 million price range. So most of the buyers are looking at something which is 2 million or below. How about size-wise? 84% of transactions were below 1,500 square feet. Right. So it's critical to realize that when you want to buy, critical to know that when you want to buy something or you want to recommend to your clients what to buy, the quantum of investment is important because that gives you the liquidity factor. Real estate it's already quite illiquid. And you don't want to make it even more illiquid by buying something that the market does not want or falls out of the affordability price range. So these two criteria: size, 1,500 square feet or less, and quantum less than 2 million. Right. So this again shows you, this chart shows you the types of performance of medical suites, and it has been trending up quite sharply. And in fact, for some places like Mount Elizabeth, it's over $7,000 per square feet. Unfortunately, there's not much stock in medical suites. And for medical suites, you can buy a medical suite as an investment, but you cannot convert it to office use. The tenant has to be as SMA approved practitioner or approved doctor. So the investment case for office space, 3 examples I drawn out. One is for International Plaza, the other Maxwell House, the third is the Central along Eu Tong Sen Street. So if you had bought International Plaza, say in the mid-70s, you rent it out, you would have gotten a 7.9% compounded rate of return in Singapore dollar terms. 7.9%. If you had bought the Central around 2004, your annualized return is 14.5. This is not the overall price upside. This is your annual compounded return. Right? What does it mean? It means that if you have invested $1, say in International Plaza, after 10 years, you will get $2.14. For the Central, you'll get almost $3.90 after 10 years. Right. So there's still a positive yield spread between office space and, say, a 10-year Singapore government bond. Maybe that's your borrowing cost. Right. So there's still a positive yield spread. Some will say, well, okay, interest rates may rise, but I would think, yes, it may rise, but I don't think it will rise that much, because if you look at the situation in the US, the number of people on food stamps in the US is about 47 million. About 15% of the US population are on food stamps. So whether you want to really taper off QE and raise interest rates sharply, I really have my doubts. And in Singapore, the normalized interest rates, SIBOR, 3-month, over the past 10, 12 years, may be over 3%. But that's inclusive of two tails, the era in the early 2000s and around 2007, that high interest rate that bumped the average to about 3%. If you chop off those tails, the average SIBOR is just slightly over 2%. So I don't think that the interest rates will rise, but interest rates will not rise that much. So that is more or less, that concludes my part on strata title commercial space. Now for industrial space, I'll verbalize it. Basically this, all this while, because of the 7 rounds of cooling measure, attention has been focused on the residential market. And we kind of lost out, forgotten about the industrial market. But having said that, between the turnaround after the global financial crisis to second quarter this year, industrial prices actually rose 111%. So from second half of 2009 till today, industrial prices in Sing dollar terms are up 111%. On top of that, rents went up, but didn't go up that much. Rents went up by 65–70%. So industrial market has actually been pretty much booming over these years. Having said that, I will want to highlight this, that in industrial, it's much like residential properties. In residential properties, if you have bought a residential unit in the 80s and 90s, your usable space as a percentage of gross floor area range between 80 to 90%. For example, in Four Seasons Park, the efficiency is 80%. But when you go to residential projects that were completed in the year 2000, closer to 2000 and above, efficiency rates started to creep up because it included things like planter boxes, loft, bay windows, access balcony. To the point where your efficiency space is about 120%. Right. In some countries like Malaysia, your efficiency rate is still about 80%. In Thailand, it's also about 85%. So what you see is what you get. Now, in industrial, the efficiency rate can be as much as 144%. The question is, are we buying industrial space that you can use? It may come with a loft. The loft has a strata title area. They are selling you strata title area, so your dollar per square feet may be $700 per square feet on a strata title area. But what is your dollar per square feet on a usable area? Could be 1,200, 1,300. Can you build anything on the loft? Possible, but very limited users. So very limited users, and you are paying effectively $1,200, $1,300 per square feet. So the industrial market has some issues to be resolved. But does that mean that the industrial strata title market is something that you can, that you do not partake in? Well, answer is yes and no. In some cases, there are, today you have 30-year leases on, from the JTC or, for industrial buildings. Some of these are speculative builds. So when you're talking about speculative builds, we are not sure whether you can recoup back your investments over time. Nevertheless, in certain areas, say Paya Lebar area, Eugene probably had alluded to the Paya Lebar area, there are industrial, freehold industrial buildings there. They may come with the loft concept. So your effective price is over $1,000 per square feet. But look at it, it's freehold, it's new, you rent it out. In 20 years' time, after 2 to 3 revisions of the master plan, do you think it'll be industrial? It may be residential. But if you have bought something in those areas that are on 30-year leases, at the end of the 30-year lease, the government will say, this is residential, I take back the land. But for freehold industrial lands in those areas, you actually stand the windfall lottery, the lottery windfall of being able to get it en bloc for potential residential development in 20 years' time. So in the meantime, although you may be paying high for the unit, but you are still getting a yield, rent it out. Once that 20-25 years horizon time frame is met, I'm sure the whole area will be revamped. So we are looking at areas like Paya Lebar, Tai Seng, right, MacPherson area, freehold industrial buildings. I think these are still viable if you take into account the potential for en bloc or change of use 2 decades down the road. Thank you very much.